Man, another day, another grifter trying to manipulate his audience for personal profit. Welcome back to Strongman Personal Finance. We're going to cover a recent video published by Sven Carlin, who is a man who lives in, I don't know, Germany or something. And he loves to talk about how his stock research is so great and how, of course, he's beat the market, even though we've never seen actual legitimate audited personal financial statements and rates of return. And he loves to take a dump on the indexing philosophy because any stock guru out there hates indexing. Why do they hate indexing? Is it because it's bad for retail? No, it's actually great for retail. They hate indexing because they cannot sell their personal services and make a profit from it, because indexing removes the need for people like them. And frankly, I think that's disgusting. So let's go ahead and react to this video from Meat Spin. Or I don't know why I'm saying Meat Spin. Sven Carlin. I say the efficient market hypothesis is stupid. All right, so basically the efficient market hypothesis states that securities price in all known information, which seems pretty reasonable to me, okay? We have a bunch of publicly traded companies that publish financial statements, and there's analysts asking the companies about their future profits and sales and et cetera, and all of that data feeds into the stock price. But people think that because a stock can vertical line or go haywire for no reason whatsoever or because of new news, they think that invalidates the efficient market hypothesis. No, it does not, okay? If you invest in a stock and then new information comes and the stock vertical lines, that's the market pricing in new information, okay? And yes, over the long run, this has been proven over and over again, over the long run, not year to date, you clowns. It's exceptionally difficult to beat the market. But people like Sven don't want you to know that. No. They want you to buy his research, bro. So he says in this video, I say the efficient market hypothesis is stupid. And then let's read the comments here. Okay, this is hilarious. This is absolutely mind-boggling. Let's make sure we're sharing. Okay, we're sharing. He says, the efficient market hypothesis states how it is futile to think as whatever effort will not help you beat the market because all available information is already priced in. However, the next sentence, if you are a sophisticated, yes, I'm sophisticated, yes, investor looking for in-depth, independent stock analyses, a strategic value investing portfolio approach, here is my stock market research platform. He literally just did it. Efficient markets is bad. By my research, bro. How do people fall for this? He's so stupid. All right, let's see what he has to say.
Markets are efficient, how it doesn't pay to be an active investor, how you can't beat the market no matter how much you try. Buffett didn't do it for the last 30 years.
Okay, you know what? Here's how a market works. Some people get outsized returns, very few. Some people do. Of course, somebody's going to beat the market. It's mathematically a certainty. Somebody in their lifetime will beat the market. Duh. Okay? Who disputes that? The whole point is most of you, the vast majority of you, will not. It's like the Pareto principle. The lion's share of the gains go to the top 20%. Okay? I'm in the top 20%. I have Robinhood and I'm stupid. No, you're not in the top 20%. And I bet you it's even more skewed than that. Okay? Most of the gains go to a very few people. Most of the outperformance goes to a very few people. The majority of you underperform the market. This has been proven over and over and over again. And you morons don't care. You don't care. And people like this exploit that to sell you stuff so they can generate income for themselves. Duh!
90% of managers don't do it. And then there was just answer here, how Buffett size, things like that. And then another rebuttal here. So almost 90% of professionals, no amount of research or hard work, value strongly underperformed the market because it looked cheap, because it did well in the past. Now it doesn't make sense. So I want to touch on these topics and give my opinion. I think I never discussed.
Man, I like how that guy stated actual provable facts. Tell me more, Sven.
The efficient market hypothesis, because it is counter value investing, but after such a strong comment, I feel the time is now.
Yep. He's got to defend his business model. Oh, no. Everybody indexed. Oh, my God. I couldn't sell my research. I have to stop this now.
Then there was this also great comment in relation, diversification, more concentration, and also something very important here. Like you, I have observed that there have been great stretches in the market where stocks go nowhere. 29, 54, 68, 82, 2000, 2013. So despite what everyone says, timing the market and missing a big sell-off can be very profitable. Okay, that's another way of...
Duh! If I perfectly knew when to sell the top and buy the bottom, yes, I would make a ton of money. Wow, that's such a genius statement. Oh, did you guys try to time the tariff sell-off in April? Yeah, I bet you some of you did. You probably sold because, oh, tariffs, oh, it's the end of the world. And then the market's up like astronomically. You know who didn't sell? Daddy, because it's hard to time the market. You have to time the top and the bottom. It's exceptionally difficult. And trust me, you don't know how to freaking do it. You are a retail clown. My course, bro.
Looking at things, but then again, do we have to beat the market or do we just have to reach our financial goals? There's a big difference there. So let's start. With this moment here, if you continue here and you take the red pill, your life will not be the same as it was before you listen.
Oh, now it's the red. It's the what he's saying is the red pill. It's the inconvenient truth. Stop, dude. Your research platform is not the red pill. Okay, he's trying to be. Oh, if you're one of the elite exclusive people that wants to see reality, you need to buy my research, bro. It's like, come on, dude.
Listen to someone, let's say, talk differently, then what's the predominant mantra on financial markets? I think that 2% of the market looks at investing and things like that like we do, while the 98% will keep praising the flat earth society. Warren Buffett's words.
You're part of an exclusive class. I mean, I could make the same argument myself. I'm a total world investor. Nobody likes that. That's extremely unpopular. Okay? I'm the pill that is red. Not this freaking clown. He's the blue. He claims you can outperform the market using whatever he freaking preaches. He is part of the blue pill. I am the pill that is red. Who does VT? Who does that? Nobody freaking does that. Okay, or very few people do it. I'm part of the 2%, not this clown.
Be very careful. If you're efficient market, SP500, making money on all these things, good luck. I wish you all the best. If you are still...
And oh, by the way, if you just buy U.S. stocks only, you're not following the efficient market hypothesis. You're not. Okay? You have to be total world market cap weighted. That is the efficient market hypothesis. Not, I'm going to massively overweight U.S. stocks, bro.
Here, let's start discussing things. 90% of professionals don't beat the market. Okay, the market is made of professionals, so 50% should not beat it, 50% should do better. Add the fees, that's already, on average, professionals will underperform the market. Add the clients' expectations, the withdrawals, the fact that you lose your job if you underperform for 3 years, then it is clear why that doesn't happen. And then again...
Yes, putting your money with active managers is stupid. Okay? All anybody does is they find the manager that did well over the past 10 years and they buy into that fund. That's how they think. Wow. Genius. And then they probably freaking underperform going forward.
And we'll discuss also what market. So let's start with 90% don't beat the market. My goal should then be to be in the 10%. So my mind goes like this. What do I have to do to be in the 10% of money managers? Then I constantly beat the market because 10% of people.
These guys are professionals. They hire like analysts with CFAs and they do analysis. Come on, people. Stop. Just stop. What do I need to do to be the 10%? Oh, buy Sven's research, bro. If you factor in your returns minus the research fees, you're probably still underperforming.
People do it. Let's be blunt here. Why would I be like the rest of the population? I work hard. I get up at 4 in the morning. I work till night. I have a PhD. I have 20 years of education, 15 years of experience. I work my ass off. Why would I expect anything to be like the rest of the population? Let's be clear here. Good luck with
Nobody buys VT.
your averages. I'll stick to my focus. Professional investors. Let's go to the Big Short. Michael Burry says everyone can see that there's a real estate bubble. And then the answer from the investor is actually no one can, only you. If you manage money professionally, you manage it again for a client.
Oh, that's a cute analogy. That's a cute story. Yeah, Michael Burry, okay, he made some money like with contracts or whatever, betting against the real estate market. And you know what he did ever since then? He made a bunch of stupid calls. Okay? He told you to sell and the market's up like 1,000% since that freaking tweet that he did a year or two ago. Maybe he just got lucky that one time. Wow.
And is the client rational? Very, very difficult to find rational clients. When I discuss asset management opportunities with clients, I found one person that's rational. All the others that have money are complete irrational personalities, and therefore I don't accept their money for management. When things get hard in investing, you need to have the right mindset. That's where the difference is made. With management, yearly measures, performance, constant. If you underperform, everyone switches away. No amount of research will give you any advantage about the businesses because everything is already priced in. I never tried to beat the market. I don't go out and try to beat the market. I don't give a rat's ass about the market.
Wow, Sven, your language is getting real. I'm not appreciating these curse words. They're really starting to offend me. That's not very professional, Sven. Okay, we need to keep this PG for the audience. Okay, your audience is a little slow. People that buy your research are a little bit slow. Okay, you don't want to scare them away. You want to present the aura of a professional businessman. Okay, just like me in my bathrobe.
What I want to do is find investments that fit my investment requirements that might lead me to my financial goals. Whatever the market does, who cares? And this makes me biased because I've been investing for 23 years now. And just quickly, so I started here 2002, 2025. The market did very well, the S&P 500. I did my 5x in the first few years. Then I lost 20% in the crisis, which means from the...
Oh, he said, prove it, bro. Oh, I did 1,000x back then, bro. And I actually made money during the crisis, bro.
Start, I was at the 4x. 2010, 2016, I did another 4x. That's 16x. Then since I launched, let's say take a pause here, I made some money, but I don't know exactly how much. Then I launched my research platform and model portfolio. I did 15% per year, 2.5x. And if you want to check my performance, I am at par with the market with a lot of work. That's correct.
He's at par with the market with a lot of work. He literally proved himself wrong. Then why do all the work?
Should I stop doing and just invest in the market? We'll discuss that. But all in all, since I started, 16x times 2.5 is 40x my money. Let's compare it to the market. If I include the dividends there, that is an 11x. So I did much better without the market.
I'm sure you did, bro. I'm sure, bro. And even if you did, statistically, some people will beat the market. It's guaranteed. That doesn't mean that everybody can. It's literally impossible for everybody to beat the market. It's impossible.
This is why I'm biased. If I had invested in the market, I would not have the money to increase my circle of competence in 2009 and go do a PhD. I paid for it. 2014, I left my job. I had the money, thanks to investing, to go to Bloomberg, to go to London, to lose 20,000 in 10 months on rents. We didn't want to live in rooms, so we rented an apartment in London, other education on top of it. That is what investing allowed me. If I was just focused on the market, I would still be a poor teacher in Croatia. That's the story of my life.
Well, if you buy an index, you can focus on other things. That's the point. How are you going to do all this other stuff if you're constantly analyzing securities? I just buy VT and I do other stuff like this live stream.
Just different for different people, likely. And then another thing, I like investing the way I invest. My portfolio PE ratio now is 10, has been over the last 7 years, and I've done equally as the market. The point is that what I try to do is really invest.
He literally shills PE and dividend yield. Like, that's like the most clown tier analysis. A PE is a function of past earnings and the market pricing in future earnings. Higher PE means the market's pricing in higher growth. Just because you have a low PE doesn't mean you have a good portfolio. And then he talks about dividend yield all the time. The dividend yield is just a distribution of profits from the company's balance sheet to the shareholders. That's irrelevant. Actually, I argue focusing on dividends will cook you because that naturally leads you to buy higher and higher and higher yield dividend investments, and you end up buying yield max. That's the chain of logic with freaking dividends, okay? That's all PE and dividend yield. Wow, that's so mind-blowing, bro. Buy Walgreens, bro.
Investing versus whatever efficient markets do. Because when this time comes that the market does nothing, then real investing shines. If I do my 15% against the 15% of the market.
Or you just keep dollar cost averaging and you have global diversification. Yeah, maybe that works. Okay, if the SPY is flat for the next 10 years, I don't care. Number one, I'm globally diversified. And number two, I have a multi-decade time horizon. I will just keep buying. Wow, it's shocking.
When the market does 15%, okay, I don't expect to outperform in good markets. And keep in mind that markets have cycles. We are now in a great market cycle for the last 15 years. No recessions, everything is great. We print money, we lower interest rates, financial assets go up. Everyone is a genius. Let's go back here. Keep in mind the market was down 60%, I was up 4x in the first 10 years. I would not have had the money to invest in my PhD here if I had been down 60%.
If you want to get a PhD, maybe you should have the money in treasuries. Yeah, or some kind of money market or savings account. So you don't risk it in the market. If you need the money next year, it should not be in the stock market.
Also, likely not investing here because it looked terrible. And that's the story of my life. Here again, 30 years of nothing, 15 years of nothing, down 60% in real terms. So here is where investing shines. And here is where, yes, it is stupid to.
You would have made a fortune if you dollar cost averaged over those time periods. If you dollar cost average, you're buying all those cheap shares. Guess what? When the market rips, oh yeah, you're going to make a lot of money. You just have to be patient.
To do your job, Sven. Sven, you're an idiot. Sven, look at how much money we are making on Palantir, on things like that. However, I also look at history, and each time when we were at these valuations, each time this happened. Whatever here happens, I don't want to be part of it. Because if we speak of outperforming.
Yeah, because his stocks totally won't go down too. But of course they'll go down. Okay, wow. Wow, everybody's stocks went down. Oh my God. Oh, well, mine went down a little bit less. I missed massive gains in the past, but mine went down a little bit less today. Therefore, I'm a genius. No, you're not. Okay. Lifetime total return is all that matters. You maximize your lifetime total return by buying the whole world's market and holding it net of and getting the returns of the global market net of fees. It's that simple. Okay, not buying and selling and paying freaking capital gains taxes and massively overweighting certain stocks relative to their market capitalization. You can win great some years, but over your lifetime, which I know you little bugs can't imagine a life. You can't project your mind into the future because you're a bug. You're going to underperform in the long run. Most likely, only very, 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 very few people will outperform. I'd rather get the guaranteed average performance than the 10% chance of getting massive outperformance. Okay? You can reach your financial goals pretty simply being a total world investor. Okay? Oh, well, you could have 8 million instead of 7 million, a 10% chance. Yeah, 10% chance you could have 8 million instead of 7 million. Oh my God, how am I going to live off 7 million? Oh man, it's so horrible.
In the next 10 years, if the market is down 50% and your investment manager or your somebody is down just 40%, that would be the genius of the next 10 decades. So, oh, you lost me just 40%. Thank you. You are a genius. Does it work like that? Would you call your investment banker? Let's say you have 100 million, everybody lost 50 million, he lost you just 40 million. Would you call?
I mean, he's just implying that he's always going to win at bear markets. That's not true. That's like the implication as well. Oh, when times are bad, I'm going to outperform. Prove it. We don't know the future. You could underperform in the future. We could have a bear market. Your stocks could drop more. That could happen. And then you're really going to look like a freaking clown.
Him and say, thank you for losing me just 40 million. To stay in the movie, if you lose me just 40% while the market loses 50%, I will personally give you a, will you call your investment banker and do that? Do I have to even discuss this? But as we said at the beginning of the video, you have taken the red pill here. Let's continue. Because despite this great market that we are living here and everyone is watching here, where are these?
And notice he only pulls up the S&P 500. Yeah, I don't think you should only have the S&P 500. That's not really efficient markets. That's actually kind of an actively managed investment. It's an actively managed basket of securities. Did you guys know that? Yeah, it is.
Guys, think how you felt here. 53% down in 9 years, after 9 years with minimal dividends. The dividend here was 1% like it is now.
Why does the dividend matter?
And then, speaking of Warren Buffett, 1984 article, The Super Investors of Graham and Doddsville. Keep in mind, 1968, 1984, the market did nothing. You can download it here in my free stock market investing course in the link in the description below. He discusses how the academic world,
there it is. He'll sprinkle in, buy my research, bro.
If anything, has actually backed away from the teaching of value investing over the last 30 years. It's likely continue that way. Ships will sail around the world, but the flat earth society will flourish. There will continue to be wide discrepancies between price and value in the marketplace, and those who read their Graham and Dodd will continue to prosper. So we'll just keep on doing our Graham and Dodd and keep prospering. Another 85 letter to shareholders. We are enormously indebted to those academics. What could be more advantageous in an intellectual contest, whether it is bridge, chess, or stock selection, than to have opponents who have been taught that thinking is a waste of energy? And speaking of outperforming the...
Oh, yeah, I think about other things like my tax business. Yeah, okay. I think about my job. I think about, I have brain space to think about other things besides, oh, low PE, high dividend yield, buy. Yeah, that's such a big-brained thought process.
The S&P 500 is 100% invested. This guy has 30% of assets, 50% of equity in cash, and he's still performing. And people compare anything. Performing with 10% of the risk, 20% of the risk. It's about the risk and reward. Efficient market thesis, hypothesis completely disregards risks because it's already priced in. Risks don't exist, but we'll get to.
Yes, it is priced in, clown. Go compare the Chinese stock market to the U.S. stock market. China has all these AI companies, and they're making tons of money. They're doing good, and they're investing in all these projects, and it's like 3% of the global market cap. Okay? Then you got U.S. is like 63%. Yeah, it's priced in. The risk is priced in. Yeah. Uh-huh. But he knows more. He knows more, bro. No risks are priced in. Come on, dude.
To that too. Now, research gives no advantage. Okay, if I had to pick two stocks that will beat the market in the next 12 months, no way. It's just a gamble. So I cannot do that. Therefore, yes, in the next 12 months, research gives no advantage. If I have to pick two stocks.
Sometimes it doesn't. Like, look at Carvana. Okay? I looked at it. I thought it's a freaking turd. It's a total turd. The stock has massively outperformed the market. Can you really think you can predict this stuff seriously? do you really think you can predict this stuff? I don't think you can. A lot of the times it's freaking random. You look at a company and it's like, okay, it's losing cash, it's massively unprofitable, it's on the verge of bankruptcy. I'm going to probably stay away from that. And then the stock rockets up 1,000%. Okay, you don't know. You don't know. That's just how it freaking is.
That will deliver good returns no matter what happens over the next 5 to 10 years. Wait for them to come to the right price in the next few years to buy the right business. That's something different. And yes, research doesn't give any advantage in this market. I mean, if you research this, then you can say, okay, it's impossible to research. And now look at the price, it's just going up. It's crazy.
See, I think Tesla is a clown stock too, but guess what? There's actually a chance that what Elon is trying to do works. There's actually a chance. Even I can admit that. And if it does work, guess what? The valuation will be justified. There's always a chance anything could happen. That's why I just buy it at market cap weights. If it collapses, oh well. If it vertical lines to 10 trillion, I profit. I think it's a win-win. I don't really lose that much, but I can win big. Okay? The market's pricing in the future. That's what they're doing with Tesla. I think it's nonsense, but guess what? I could be wrong. It's possible. I could be wrong. I know it. You have to admit that sometimes. Okay? That's why you buy everything.
Tesla has a market cap of 1.4 trillion. The total cumulative profits in the last 15 years was 25 billion. This is all the money Tesla made. So yes, it doesn't make sense to make any research. However, if this ever happens again, here it will pay to do a lot of research. I'm not predicting. We will see what will happen. I don't care what will happen. I'll just keep doing it that whatever happens, I do well. Maybe history will rhyme.
Yeah. Oh, my stocks might go down for a decade, but I'm not selling them potentially until 3, 4, 5 decades, or maybe never. Oh, the market went flat for 10 years. It's over, bro. I'm globally diversified and I'm dollar cost averaging. Oh, it's over. Such a clown.
Maybe this time it's really different and stocks keep going up 1% a day. But okay, stocks keep going up.
Guess what, Sven? It could.
15% per year. If I keep doing my 15% my way, like I've done in the last 7 years on my research platform with my model portfolio, fine by me. And now we discuss academia doesn't understand investing risk. They don't care about risk because everything is priced, you cannot know, who cares? Again,
you're misrepresenting efficient markets by only pulling up the S&P 500. You're using something that's incorrect to prove your point. The S&P 500 is not efficient markets. It's an actively managed portfolio of stocks in one country. What?
Risk. Buffett in cash. P ratio of S&P 500, 31. Mine is 10. Growth equal, 5% earnings for S&P 500, 6 to 10 for mine. So fundamentally, I'm doing better. Risk is not volatility. They see a price go up and down. Ooh, risk is a margin of safety. I don't care where the price goes.
That's funny.
I can't lose money from a fundamental perspective over the next 5 to 10 years. There is a margin of safety, and that is good enough for me. Whether your goes up or down or doesn't ever get up or who, I don't care. So markets are extremely efficient. I completely agree at totally disregarding risk. And then even passive becomes active when passive doesn't work. French bonds, news from 5 days ago, risk of forced sales if credit score is cut. And then what do they?
Yes, that's the market pricing in new information. Okay. Oh, yeah. Okay. Yeah. Your bond ETF might lose 0.1% of its value if you have forced sales of French bonds. Oh, you got me. I guess I can't have an ETF, a total world ETF anymore, bro. You got me.
The masters of efficient market theory do They redraw the rules to keep French bonds, because if they would have to sell, it would destroy the liquidity in the market, and the market would not, and there would go down, and that would look simply ugly. So let's redraw the rules. Let's go, oh, here we are passive investors, efficient market, and here we become active because, oops, our thing doesn't work. And efficient market theory works until it doesn't. Long-term capital management.
Guys, some French bonds might potentially be liquidated. Oh my God, that means the whole theory is nonsense. By my research, bro.
It worked until it doesn't. And when it doesn't work, when reality hits the efficient market academic theory. And let me again tell you, Sven, you're wrong. French bonds are perfect.
Pull up the SPY. Please pull up the S&P 500 again to prove your point, even though it's not efficient market. Go ahead, please.
Price, there is absolutely no risk. I completely agree. With a 4% yield, 10, 20 years from now, there is a guarantee. There is no risk. There is a guarantee. You will lose your purchasing power by investing in French bonds. But then again, markets are efficient. Put in bonds, put in this. Who cares? And we discussed this, how BlackRock is just investing.
Maybe people have bonds for different reasons than trying to beat inflation. I have treasuries for a very specific reason. And I understand if I held them for the long run, I would underperform inflation and probably the stock market. But I need them for other reasons. Oh, but you're so stupid. Why are you buying treasuries when they don't beat inflation in the long run? Oh, I guess I'm just an idiot. Okay, one-dimensional thinking there.
Everywhere, don't care about the price. Yes, they've done well. Unfortunately, the true investors that are warning about that, like Icahn did a few years ago, we'll see those discrepancies are old and almost dead. But that's the story. And now BlackRock keep ramping up private bets, insurers putting more money, and it is just a flow of funds where everything goes up, and then even they are less risk, lower volatility because there is no market that price the thing. So, oh, the market went down, my assets go up in price. That's private equity pricing. So there is a lot that tells me risks are accumulating. I hope, again, the risks don't materialize, because
guess what? If the market goes down 50%, you're going to be fine. Everybody's going to be freaking down. You know who's going to be down more? Probably the active investors. Probably. Most of you will massively underperform the index if we have a market bubble pop. I'll be just fine no matter what freaking happens.
Because it would lead to so much pain. But given the exuberance and everything keeps going up, it might last another 10 years. I hope so.
Oh,
but if this...
He pulls up international... Hold on a minute. Let's see. What's this?
CI index. What's that? That's a 6x. Great. But then again, it's mostly made of the S&P 500 because it's 65% of the global weight. Let's look at the Nikkei over the last, what's this, almost 40 years. Zero performance. Let's look at...
What are you talking about, clown? If you're dollar cost averaging, you would have made a lot of money. Oh, I'm going to find the top and compare it to the top. I'm done. I'm done with this clown. All right. Let's do some comments here. Then I'm going to go have lunch. We got Crypto Panther. What's up? Yeah, B&D totally went up related to earnings. Yeah, it was a bunch of retail morons gambling on the stock. Okay? That doesn't disprove efficient market hypothesis. It's a bunch of morons gambling on a company that will go bankrupt. It will go bankrupt. Just a matter of time. Good luck timing it, though. Why are we not getting a notification? I have no idea. Are they turned on? You should have a system that tell your community, bro. I can't do that while I have a full-time job, dude. I can't do it. Okay? I stream when I can. When I'm self-employed, I can have a schedule. I can't do that now. I like Sven. He makes good... Yeah, he made bad calls too, but we only talk about the good ones. VT is the 1% lavender pill. Dude, nobody buys VT, man. Nobody. I mean, I'm obviously exaggerating, but no, you think most people are globally diversified, market cap weight, and hold it for their whole life? Very few people do that. Extremely easy. Oh, yeah, it's so easy, bro. It's so easy, bro. Just buy Sven's course, bro. You're telling me Tesla's fairly valued, its valuation makes sense. So why do we have stocks going up 100% in a day on a single news if that's because it's pricing in new information? That's all it is. With Tesla, they're literally pricing in the robotics, robo-taxi future, okay? They could be right. They could be wrong. I personally think they're wrong, but I don't know. They could be right and I could be wrong. That's why you index. You're not taking these gambles. What are you going to do? Short Tesla? Good luck. Most retail investors are they're in QQQ and SPY. They buy stuff that goes up a lot. They are not following the efficient market hypothesis. They are not. Indexes, the blue pill. It depends on what index you're buying, to be perfectly honest. He paid for a PhD. LOL. Most people get paid for that. Must be. But if he, he was investing, bro, so he could pay for his PhD. Sven trailed the market in a major bull market. Yeah, I mean, if I'm going to trail the market, I'll do it with a total world index, not spending all my days researching and then paying him for research. Value investing is not to perform during good times, but to outperform during bad times. I would imagine if I'm going to spend time analyzing, I want to beat the market. Otherwise, why waste my freaking time? We haven't had a recession since 2009, which made us look stupid. I'll give you that. I mean, I don't know. Nobody knows what's going to happen. Investing is about buying something cheaper than what it's worth. That's it. Well, good luck with that. I'm sure you can identify if it's cheap. All right, Dex has I can't see what that is. It's like two little rectangles. Doesn't matter if it's an ETF or a single stock. If you pay too much for it, you will lose money. Maybe. Or maybe it's priced correctly. I don't know. Because VT wasn't around in early 2000. That's true. That is true. Your ETF hasn't had a real bear market, so how could you say it will outperform? I don't know if it is. That's the point. But if the SPY sucks, I have global diversification. I'm not worried about it, okay? He's got more than 10x your subscribers. That means he's at least 10x smarter. Yeah, Kevin is like, Kevin's like, oh my God. He's like a god, basically, compared to me. He actually had data to back what he says. Oh, yeah, it's got data, bro. Yeah, all the data of most fund managers underperforming the index. That doesn't matter. That's not data, bro. In the short run, yes, it's all random and hype, but over the long run, valuation matters. Yeah, but valuation is a pricing mechanism of expected future profits. Tesla's up 5%. Why is that? Well, maybe it's because valuation and revenue matters. No, I agree. Tesla's cloud stuff. But what I'm saying is there is a possibility that it works out. It's a fact. And if we get to a bear market, they will get hammered a lot more than it. Okay. Then why pick individual stocks? Buy them all. Between 1929 and 1940, we haven't seen all-time highs. Well, yeah, be globally diversified and dollar cost average. Would you have DCA'd into a multi-year bear market for 20? Yeah, I would have. I'm globally diversified. And you're going to make money if you're dollar cost averaging. You could have an oscillating market, right? That ends at the same price it was 10 years ago. If you're dollar cost averaging, you're actually up because you're buying a ton when it's down. That actually is a thing. Between thinks they are a genius because it went up. When the music stops, it's a whole other story. Strawman, 90% of current retail haven't lived in a real... Dude, you think I'm going to sell VT? you don't understand me, bro. I'm not selling. I will never... The only time I'll sell is if I need the money. Like, oh, I've got to pay for my kids' college, or I need to be self-employed. I need some cash. Like, that's the only time I'm going to sell. But I'm not going to sell because I'm like, oh, I'm going to time the top and the bottom. No, I'm not. I don't think I can do that. Yep, I'm gonna get annihilated. We need Gil. Gil's laying on his stomach tonight. You were 10 years old, you didn't have any cash into the market. 99% of current retail, or dumb money as I call it, got into stocks. Well, I mean, I agree. Most people are morons because they're trying to do what Sven's doing. Free money made them think they were genius. I agree. Funny that he skips his exact theory because it debunks his whole theory on VT. How was VT debunked? How did he debunk VT? By showing the SPY and making claims that he beat the market with no proof. How was the theory debunked? It's not. He wants you to buy his research. So Beyond Meat was pricing in new information. So I had to go down 80%. It's pricing in bankruptcy. And then a bunch of clowns went and bought it. But guess what? It's going to go bankrupt. It's going to happen. It's a matter of time. The fact that if you can convince a bunch of morons to buy something at once to pump the price doesn't disprove efficient markets. Okay? It does not disprove it. All it does is it show a bunch of morons at a certain time bought a worthless stock. Just like, look at freaking AMC, okay? Massive debt, garbage. A bunch of retail clowns pumped it up. And look where it's at now, okay? The market will figure it out, despite what a bunch of retail morons do in the short term. And guess what? If you're buying AMC and when it's priced for bankruptcy, the risk is almost minuscule because you're buying it while it's priced for bankruptcy. You're not going to lose that much. You might not even be in VT. I don't freaking know. It's so small. Most of your funds are at the peak of that market. Even if you DCA, you have to add more than 100% of your cash deployed at the top to move it. No, you dollar cost average constantly. Every paycheck, you dollar cost average. If you don't, your return will only be the dividend, which is 3 to 4%. Not even be okay. You guess what? If your return is that, most other people's return is less. He was talking about international stocks. That's right. You know what, guys? Go ahead and just buy large cap tech. I don't freaking care. That's why I say markets are not rational. TLT or BND. Oh, BND is a kind of an efficient markets thing for bonds. Did you know that? Yeah, it is. Okay. It is. It doesn't matter if you DCA, if your funds are at the peak, you have to buy a ton to move the needle. You know what? You're right. Go ahead, buy puts at the top, buy low PE stocks with high dividends because Sven told you to. And I'm sure you'll be just fine, bro. You're totally going to win, bro. Make sure you buy his research while you're at it. Okay. God, this is so exhausting. It's so exhausting. Yeah, go ahead. Beat the market, bro. It's so easy. All right. Anyway, like, subscribe. Consider joining as a member to support the channel. Consider booking a free 30-minute tax consultation with me. I am a certified public accountant and would gladly do your business and or personal taxes any state in the United States. You can talk to me for free. I give you upfront quotes, fixed upfront quotes, and I'll prepare your taxes like a boss. Talk to you later. It's lunchtime. I'm hungry. Cheers.